welcome back to Durek Forex Coaching Academy. I am Balamohan Krishnan. This video we are going to see about why should we trade in Forex market. So the previous chapter that we saw is about the Forex market, its history, its evolution, and how the market structure is set up. So this video we are going to see why should we trade Forex market. So if you are a new joiner on this chapter, I would suggest go back to the chapter 1 and watch through the videos. So you will get a clear picture about the Forex business. So now let's get into this video about why should we trade in the Forex market. So before we go into why should I trade in Forex market, so we should be knowing what are the different markets available for trading. So obviously the first market would be a stock market, which is very familiar for most of us, so which trades on the company equities. So this market is more specific to a location or a particular country. This is more of a boundary constrained market. So the next market would be the commodities market, which trades all the commodities like gold, silver, crude oil, coffee, wheat. So most of the commodities are traded in this market. If you are able to trade Forex, so you will be very well easily able to trade the commodities market as well. So out of all the commodities, gold is much more relevant to Forex market. As we know, like currencies have a high dependency on gold value. So whenever there is an impact on a currency, the value of the gold might increase or decrease. So saying that, there are various other markets like the derivative markets, which consist of the options, futures, bond markets. These markets are a little complex for a beginner to learn, unlike a Forex market. So now let's get into why should I trade in a Forex market. So the first point is that it is a global market. Forex market is a global market. It can be traded sitting from any part of the world. The traders, the brokers, and the banks are distributed globally. A person sitting in Singapore can buy or sell Mexican peso. A trader sitting in Cyprus can buy or sell Singapore dollar. This is possible because of the organic network of brokers, LPs, and banks. Forex markets run 24/5. Essentially, it starts around 8 a.m. Sydney time on Monday morning and ends by Friday evening 5 p.m. New York time. So this open and close time depends upon the broker that you are. So there would be minor difference in plus or minus hours depending upon the broker you are connected with. So the market has a weekly open and a close, unlike the stock market which has daily open and close. So the advantages of being a global market. So you may choose to trade from anywhere in sitting any part of the world. So you may choose your trading session based on your location. Like you might trade on Asian session or an European session or an US session based on your location. In other markets, you have to match the local time zone of that particular market and trade accordingly. For example, if a trader sitting in Singapore wants to trade in US stock market, then he will have to do a night shift. Since the market is running 24 hours a day, so the price gaps are very less. So the market opens once in a week and closes once in a week. So the chances of a huge price gap is very minimal. So the next point about Forex market is it is highly liquid. Forex market is highly liquid market, which means there are always buyers and sellers of a currency. Since every global transactions involve Forex, there is always a need of one currency against the another. There will be difference in liquidity based on the demand of currency. G10 currencies are highly liquid because there are huge transactions and trades happening between those G10 countries. Emerging market currencies are lesser liquid than G10. EM currencies have significant trades with G10 currencies compared to the trades between EM currencies. Tertiary currencies are lesser liquid in the market. Many of the African currencies fall into a tertiary currencies. Traders do not have any restriction on trading on any currency pairs. They will be able to trade direct currency pairs, cross currency pairs, G10 crosses, EM crosses, G10 EM crosses. Traders do not trade much of tertiary currencies because of low volatility. Now let's see the advantages of the market being highly liquid. There is always a buyer or seller in the market, unlike the share market, which is dependent on the availability of stock on a company performance. So there are chances where you opt for an IPO where you might not get allocated of shares. There is also a risk when company liquidates. The shares that we hold will be lost or of no use. However, in forex market, it can never happen. Slippages are comparatively lesser because of high liquidity. Since the volume of sellers and buyers are high, there is always a buyer to buy to your positions. Sometimes the brokers and LPs will already hold a position in your favor, which will be shared to you when you place the order. Brokers and LPs provide higher leverage compared to other markets. This will help you to make higher profits. Though you have to exercise this feature carefully, this is a powerful feature which can yield you high profits. You may start trading with a minimal investment. With the power of leverage, you will be able to start trading with just $100 in your account. So the next good point about forex market is a decentralized market. There is no central exchange, which makes forex a true global market. Market is derived purely based on demand and supply. Forex market is formed by networks of investment banks, liquidity providers, financial institutes, and brokers. Forex market is also an OTC market, so there is a trade happening in one or the other place in the world. There is not much of regulation as that of a centralized market. However, this also helps in the faster evolution of the market, such as you can launch any new type of product to service the clients immediately. Being a decentralized market, it increases the transparency of the data between the parties, as trust is the most important factor in a decentralized market. The price movements are driven by direct events of the market, which means demand and supply. So where the demand and supply is driven by the actual global trades that is happening between countries. Forex market is always a fair trade as it involves currency of two countries against each other. No country will allow its currency to be devalued against other. So we can always have a fair trade in the forex market. So moving on to the advantages of being a decentralized market. The market moves purely based on supply and demand. As said earlier, forex market is purely driven by supply and demand, which is driven by the actual trades happening around the globe. Absence of a governing body removes the issue of sudden close of market or too many restrictions, making the trading environment limited. Since the market works based on supply and demand, technical and fundamental analysis will work perfectly in determining the market movement. Being a huge market, manipulation of the currency is not possible. Market cannot be rigged because currency is the total economic value of a country. Market cannot be hacked as it is not present in a single location nor governed by a single body. Since it is being distributed across the globe, so the presence of forex market is huge and distributed, and which is called the decentralized market. So moving on to the next point about the forex market. So forex market always have a low transaction cost. The transaction cost is received in the form of spreads or commissions. Spread is the difference between the buy rate and the sell rate. So this is a visible spread. There is an invisible spread by which your broker collects his service charge. Your broker might receive a rate from LP at X and passes on the rate to you at X plus 2. So when you book an order with him, you book it at X plus 2, and in turn the broker books with the LP as X. So the plus 2 is his charge which is collected on this trade. So the transaction costs are very less compared to other market. One lot, which is 100,000 USD order, is charged at a max of $10 US. Some trading accounts do not have commissions. Rather, it is all inclusive of spreads. So hence, forex market is the lowest transactional cost market. Now let's see the advantage of the lowest transaction cost. Lesser transaction cost saves your profit. You might have made a profit, but you will be losing all in transaction cost if your transaction costs are higher. So the transaction costs are simpler and easier to understand, so you have a better clarity on your profit and loss. So you will know when to close your order or when to leave your order running. It is a good market for scalpers and automated trade. There are no hidden transaction costs. So now let's summarize why should I trade in forex market. So the first point is Forex is a global market and it runs 24/5. So you can sit anywhere, be in any part of the world and still participate in the Forex market. So the next point is the Forex market is a highly liquid market. So there is always a buyer and seller for your currencies. So you will never get stuck with your positions. So the next advantage of Forex market is it is a decentralized market. So Forex market operates across the globe. It is not owned by anybody. So it cannot be rigged and it is easy for everyone to participate. So the next point on the Forex market is a low transaction cost market. So the transaction fees are in the spreads or in the form of commissions, which are very less compared to other markets.